Amit Ramani, the Chairman and Managing Director of Awfis Space Solutions, and we also have our colleague Anushi joining us. Anushi, over to you.
Yeah, hi. So the first question, hi Amit, first of all to you. A very good set of numbers that we are looking at. Now, in fact, if we see the revenue growth has remained at the 40% mark, while margins also have seen a considerable upside. Do you see an upside to the expectations that you'd given earlier in terms of where the guidance is concerned, which is 30% of a revenue growth? In fact, your 1.5% margin also you've achieved. So what should we be looking at?
So I wouldn't want to comment on specifics here because it's forward guidance, but clearly H1 was fairly strong. I think we met our expectations, and we had given the guidance that H2 would be stronger, and we continue to give that guidance. Clearly, I think on the top line growth, we have had a very good run. I think some of the bets that we had taken our expansion, close to about now we are in 200 plus locations and close to about 18 cities. So our tier 1, our tier 2 strategy, our multi-tiering of our product, which is our flagship product, our Office Gold and our Elite, I think have all done well, and I think hence the numbers speak for themselves. Clearly on the margin improvement, our EBITDA margin has improved by almost 4 percentage points from year on year last year. We are continuing to kind of manage our profit after tax as well. So I think all the numbers are tracking well. All I'll leave it with is that H2 is going to be stronger than H1.
Would be on how the future quarters performance pan out, but now considering that there's a lot of capacity addition which is taking place, in fact you're very on track, your guidance also that you've given, want to understand how the occupancy levels going to be. Is it going to sustain at the current blended levels of 73%, and considering the kind of capacity additions that we are making in terms of seating capacity, do you expect the current internal accruals are enough to fund the growth going forward?
So we had given a guidance of 135,000 seats that we would achieve, and we are currently 120,000 seats operational. If I add the centers under fit out, another 20,000 seats, and centers under LOI, another 20, I have full visibility of 160,000 seats. So I think we will clearly meet our targets of 135,000 seats being operational by March 25. You also need to see our demand ecosystem today. I mean, our sales teams are working extremely hard, and for 9 months, we have sold 40,000 new seats. So not only is our seat addition keeping pace, but our new seat sales are also keeping pace. Hence, we feel strongly that the guidance that we had given was that in the occupancy will be maintained in the early 70s as a blended level, and we continue to maintain that guidance for the future.
Okay, and my final question to you, Amit, is also now that there are entry of some more players coming into the field of filing for the DRHP as they go forward, want to understand the competitive intensity and what is your market share in the field that you are in currently, which is the co-working space?
So, clearly, I think you can see from 2018, the market intensity has been there. I mean, the competitors that are now looking to go public have filed DRHP. They've been there for the last about 10 odd years, right? So I think the intensity has been there. If you really look at the market though, this year we did 77 million square feet of commercial leasing, the highest ever in the history of India. In terms of co-working, the same metrics apply. We did 15 million square feet this year in FY25. Very, very strong. We believe that the market is large enough that there are multiple operators that can operate in this space. And just like there are multiple banks in this country, multiple real estate developers in this country, there will be multiple co-working players in the country. We continue to maintain our market leadership. We have 200 plus centers as of today. And clearly, we have presence in 18 cities. Our model on managed aggregation, which makes us asset light and risk mitigated, continues to drive our growth. This quarter, we did 73% was done in managed aggregation as a result. Our cohort sizes of our customers, less than 100 seats is about 50% of our business, and remaining is more than 100 seats. So I think in all of these differentiated pieces, we feel that we have a very, very differentiated model, market leadership when it comes to the network, and I think we will continue to thrive and grow as the co-working industry continues to grow.
Okay, well, thanks for that, Amit. A lot of promising quarters that we should be looking forward to for the business. Thanks again, once again, for joining NDTV Profit. But over to you, Vaisha. What is something else that we can be expecting?